Hi guys, Michael here. In this video, I'm talking about the very real risk of the Australian property bubble bursting. So if you own or are looking to purchase a property, you have to understand what is happening in the market right now. Let's get into the video. If this video brings you value, please like for the whole of the YouTube algorithm and comment your thoughts below. I really enjoy chatting with you guys and I reply to everyone. And subscribe for more awesome content on personal finance, savings, investing, and overall a bigger, happier, wealthier life. All right, let's get into the data. So in the second quarter, up until the 30th of June, they've just released the price falls for the month of June. Now, the biggest declines was in Melbourne and Perth, down 1.1%, Sydney down 0.8%, Perth down 0.4%, Canberra was up 0.1%, Adelaide down 0.2%, and Darwin and Hobart was up 0.3%. The experts are predicting a property decline from peak to trough of 10%, but I expect the declines to be a lot more in Melbourne and Sydney, where there are a lot more investors. Also, the market isn't just one. There's upper quartile of the market and there's a lower quartile of the market. Now, like normal, the upper quartile of the market has the steepest declines and they decline first. In Sydney, the upper 25% of properties dropped by 1.3%, with the lowest 25% of properties actually seeing an increase of 0.5%. In Melbourne, we saw some big falls in the upper quartile of the market. The top 25% dropped by a huge 3.9% in 1 month. That is a big drop. And the lowest 25% was still not immune with a price decline of 0.5%. Despite these recent falls, over 12 months, property prices are still up a lot in Sydney, up by 13.3%, up 10.2% in Melbourne, down 2.5% in Perth, up 1.5% in Darwin, and up 4.4% in Brisbane. Sales activity has accelerated in June, up 29%, but stocks still remain tight, which is stopping the prices from falling with a lot of stock on the market. Now, the first key risks are JobSeeker, JobKeeper, and mortgage holidays ending. Right now, that is giving people enough to survive, and I say that very loosely, survive, and up to 400,000 people are on mortgage holidays. But even with this support, we are already seeing property prices decline. So once these are removed, unless the government steps in and the banks step in to extend them, which the bank's already talking about letting customers switch to interest only, and the government are already talking about letting certain industries have an extension to JobSeeker. But again, once these are removed, I expect the prices to accelerate. Let's talk about the government schemes and initiatives that they've put in to stop property prices falling too much and people entering negative equity. The first scheme I'm going to talk about is the Scott Morrison 5% deposit first home buyer scheme, where first home buyers, all they have to do is put down a 5% deposit instead of the traditional 20% deposit and not have to pay lender's mortgage insurance. The newest scheme that the government has just announced is the home builder scheme, where if you build a home up to $700,000 by the end of December, the government will give you $25,000 to go towards that. That is on top of the first home buyers grant, where home buyers get $10,000 to $20,000 depending on where you're building towards building your first home. Also, first home buyers get stamp duty savings. So altogether with these savings of the saving $10,000 on lender's mortgage insurance, the 25k home builder scheme, up to 20k first home buyers grant, and the stamp duty savings, first home buyers can save 65 to 75k, and this has increased first home buyers activity by up to 20% compared to its all-time lows in 2018, when first home buyers were at the all-time low. And it seems like the media is just throwing all this, saying buy now, get these grants, get in now, and they're trying to create FOMO because the Australian economy relies heavily on the real estate industry. Now I'm going to talk on my thoughts and what I predict may happen. And again, this is just my thoughts and my opinions. Nobody can predict the market. So if anybody tells you that they can predict the market and to pay for their course or go with their company, run away. Because every time prices start to fall or they accelerate too fast, APRA, which regulates the banks, and the Reserve Bank of Australia and the government will step in to manipulate the market. This is not a free market and is getting manipulated heavily to try to stop people entering negative equity and to increase people's wealth in their property so that way they feel wealthier and they're more likely to spend. What I'm thinking is property prices have already started to decline, like I said, with these schemes in place. So once these start dropping, I expect property price falls to accelerate, and it may take up until late of this year or early 2021, because property takes time for stock to come in the market. It's not like the stock market where you can get your phone out and boom, 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 sell straight away. People will try everything they can not to sell their home. And then even if they do want to sell their home, they need to find a real estate agent, think of a marketing strategy, put it on the market, wait for it to sell, then wait for that data to be put into the database, and then it won't be a month to 2 months until we get that data. Now, I just can't see how people can keep paying $700,000 to $1 million for a property in the suburbs with unemployment so high, wage growth going into the negative, and people's wealth dwindling. I just don't see how it is sustainable. That is, unless the Reserve Bank and government just throw more money at the market. My prediction is the property prices could fall 20 to 30% in Melbourne and Sydney, and 15% overall. And one big thing that the mainstream media is not reporting on is they're giving the headline unemployment figure, but there's 3 million people on JobKeeper and they're not counted as unemployed, but they still can't get approved for a mortgage. And at the end of the day, it is mortgage lending that accelerates house prices growth, and easy lending and lots of people applying for home loans and buying homes is what accelerate prices. But with 3 million people on JobKeeper, they're not going to be able to refinance or buy a new home. So I expect prices to fall by 20 to 30%. Also, Roy Morgan has underemployment around 20%. So even the people that are employed, they're not getting enough work. And if they're not getting enough work, if their wage is not high enough, they won't get approved for a mortgage, or they won't be able to get approved for a bigger mortgage. If you guys are looking to buy a property, what I would do is probably wait at least till next year to see how things go with the economy, if we have to go into a second lockdown, because the price falls are a lot less volatile, unlike the stock market. So if you see prices are accelerating, the declines are accelerating, you can expect it to keep falling. Unlike the stock market where it can drop 10% one day and then rebound 10% the next day. So that's what I'm going to be doing. I'm going to be trying my best to position myself to have the money there. So if I do see some cheap deals, you know, you can go on some investment properties and offer a really low offer. And if you're lucky, you may get approved now, and that gives you kind of a hedge if you get a property 20-30% market value now, or you wait and you just keep offering 20-30% lower than the market price, and you'll probably find someone that's just desperate to sell, that's just had enough, and that will just take the loss. But I also must say, property price falls can keep falling and stay stagnant for a long time. An example is the suburb Mandurah in Perth, where property prices are still 38% below their 2006 peaks. So if, you know, next year property prices are down 15-20%, you may think you got a bargain, but that's no guarantee that there could be more price falls. So you need to continually monitor the economic activity, how the Australian economy is recovering, how productive the economy is coming. So guys, I hope you enjoyed that video. I hope it gave you some insights on what's happening in the market right now, what the government and reserve banks are doing to try to manipulate the market, and how you can position yourself to potentially buy your dream home or buy your first investment property. Again, if this video brought you value, please like for the whole YouTube algorithm. Please, I appreciate it so much. Comment your thoughts below. What are your predictions what the market will do? and subscribe for more awesome content on personal finance, savings, investings, and overall a bigger, happier, wealthier life.